Are you making these costly tax mistakes? You work hard for your money, so why give any more to the IRS than you absolutely have to? Today, we're diving into the top 5 tax mistakes that could cost you thousands of dollars. These mistakes are super common, but the good news is, they're also totally avoidable. By the end of this video, you'll know exactly what to look out for and how to stay on the right side of the IRS. Let's get started. Look, nobody likes paying taxes. It's one of those inevitable parts of life that we all have to deal with, but it doesn't have to be as painful as it often feels. But did you know that you could be paying way more than you actually need to? Many people are unaware of the numerous deductions available to them, and as a result, they end up overpaying. One of the biggest mistakes people make is missing out on valuable tax deductions. These deductions are designed to help you save money, but if you don't know about them, you can't take advantage of them. We're talking about things like deductions for student loan interest, mortgage interest, property taxes, and even charitable donations. Each of these can add up to significant savings over the course of a year. These deductions can significantly reduce your taxable income, which means you keep more of your hard-earned cash. Imagine what you could do with that extra money. Pay off debt, save for a vacation, or invest in your future. But here's the thing. The IRS isn't going to hunt you down and hand you a refund just because you qualify for a deduction. They expect you to know the rules and claim what's rightfully yours. It's up to you to know what you can claim and make sure it's reflected on your tax return. This means doing your homework or consulting with a tax professional who can guide you through the process. Don't leave money on the table. Take the time to understand the deductions available to you and make sure you're not overpaying on your taxes. Your wallet will thank you. Imagine this. You get audited by the IRS. It's a scenario that no one wants to find themselves in, but it happens more often than you might think. The IRS is known for its thoroughness, and when they come knocking, they mean business. They start asking for receipts, invoices, and documentation to support your deductions. Every little detail is scrutinized, and you need to have everything in order. This is where the importance of meticulous record-keeping becomes glaringly obvious. But your files are a mess. You've got crumpled receipts stuffed in drawers, random spreadsheets with missing information, and you can't tell your business expenses from your personal ones. It's a nightmare scenario that can lead to fines, penalties, and a lot of unnecessary stress. Not a good look, right? This is why accurate record keeping is absolutely crucial. It's not just about avoiding trouble with the IRS, it's about having a clear and organized financial picture. When your records are accurate, you can easily track your income and expenses, making it simpler to manage your finances. When you're organized and have everything documented, it's not only easier to file your taxes, but you'll also be prepared if the IRS ever comes knocking. You'll have peace of mind knowing that you can provide any documentation they request without scrambling at the last minute. Trust me, you don't want to be scrambling for paperwork when you're under the scrutiny of an audit. The stress and pressure can be overwhelming, and it can take a toll on your mental and emotional well-being. By keeping accurate records, you can avoid this unnecessary stress and focus on running your business. Plus, when you have a clear picture of your income and expenses, it helps you make smarter financial decisions overall. You can identify areas where you can cut costs, invest more wisely, and plan for the future with confidence. Accurate record keeping is not just a legal requirement, it's a smart business practice that can help you achieve your financial goals. In today's digital age, there are many tools and software available to help you keep your records organized. From accounting software to cloud storage solutions, you can easily manage your financial documents and access them whenever you need. Take advantage of these tools to streamline your record-keeping process and ensure that you are always prepared. Remember, accurate record-keeping is not just about compliance. It's about empowering yourself with the information you need to make informed decisions. Don't let poor record-keeping hold you back. Take control of your finances today and set yourself up for success. We've all been there, staring at the tax deadline looming like a dark cloud. It's a date that seems to sneak up on us every year, no matter how much we promise ourselves that this time we'll be prepared. The pressure builds as the days tick by, and before we know it, we're scrambling to gather documents and receipts, trying to make sense of it all. But procrastination can cost you big time when it comes to taxes. It's not just about the stress and anxiety of last-minute filing. The financial repercussions can be severe. When you delay, you're not just putting off the inevitable. You're potentially setting yourself up for a financial hit that can take months, if not years, to recover from. Filing late can result in hefty penalties and interest charges that eat away at your hard-earned money. The IRS doesn't take kindly to tardiness, and they have a structured system in place to ensure that late filers pay the price. These penalties can accumulate rapidly, turning what might have been a manageable tax bill into a financial burden. The penalty for filing late is typically a percentage of the unpaid taxes, and it can add up quickly. For every month that your return is late, the IRS imposes a penalty, which is usually around 5% of the unpaid taxes. This can go up to a maximum of 25%. On top of that, there's interest on the unpaid amount, which compounds daily. So, the longer you wait, the more you owe. Plus, the IRS can even file a tax lien against you, which can seriously damage your credit score and make it harder to get loans in the future. A tax lien is a legal claim against your property due to unpaid taxes, and it can affect your ability to sell your property, get a mortgage, or even secure a personal loan. The impact on your credit score can be long-lasting, making it difficult to recover financially. So do yourself a favor and mark that deadline on your calendar. Set reminders on your phone, put sticky notes on your fridge, do whatever it takes to ensure you don't forget. Being proactive can save you a lot of stress and money in the long run. It's a small step that can make a big difference. If you know you won't be able to file on time, request an extension. The IRS offers an automatic 6-month extension to file your return, but you have to ask for it. Remember, an extension to file is not an extension to pay. You still need to estimate and pay any taxes owed by the original deadline to avoid penalties and interest. It's always better to be safe than sorry. Taking the time to file your taxes correctly and on time can save you from a lot of headaches and financial strain. So plan ahead, stay organized, and give yourself the peace of mind that comes with knowing you've met your obligations. Your future self will thank you. Taxes can be confusing, especially if you're self-employed, have investments, or own a business. While there are plenty of DIY tax software options available, sometimes you need the expertise of a qualified tax professional. A good CPA or tax attorney can help you navigate complex tax situations, identify potential deductions you might have missed, and ensure you're taking advantage of all the tax breaks you're entitled to. Think of it like this. Hiring a tax professional is an investment in your financial well-being. They can potentially save you more money in the long run than you pay them in fees. Okay, this one should go without saying, but underreporting your income is a big no-no. Whether it's forgetting to report a side hustle income or intentionally omitting income from your taxes, the IRS takes tax fraud very seriously. We're talking about serious consequences here, including hefty fines, penalties, and even jail time in some cases. Remember, the IRS receives copies of your W-2S, 1099-S, and other income documentation, so it's not worth trying to pull a fast one. Be honest and upfront about your income to avoid any unwanted attention from the taxman. So, those are the 5 tax mistakes you need to avoid to save yourself thousands. Remember, being proactive and informed about your taxes is key to keeping more money in your pocket. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more tips on managing your finances. Thanks for watching, and here's to smarter tax planning.